Gold just smashed through $5,000. And if your first thought is, nice, people must be getting rich, Leo had the same reaction. Then he saw what was really happening. Gold doesn't surge like this because the world feels confident. Gold surges when confidence quietly breaks. And right now, 7 forces are stacking on top of each other, pushing gold higher, faster, and harder than most people realize. The scary part isn't that gold hit $5,000. The scary part is what gold is pricing in. Here are the 7 reasons gold exploded, and the last one is the reason it might stay up here. 1. Momentum. The crowd effect. The first reason is the simplest: momentum. When an asset starts winning, traders chase it. When it keeps winning, the headlines chase it. And when it breaks records, regular people start asking, should I buy now? That's when the real fuel kicks in. FOMO. People don't buy because they understand gold. They buy because they don't want to feel stupid later. Momentum becomes a loop. Buyers push price up, gives higher price, attracts more buyers, gives repeat. And once gold is in that loop, rallies don't die quickly. They usually run longer than anyone expects. 2. Diversification. The too much tech problem. The second reason is diversification. For years, portfolios leaned heavily into stocks, especially tech. A handful of names got so big they started dragging entire indexes. That was great on the way up. But it created a new fear: concentration risk. When investors start feeling like a few stocks control the whole market, they don't necessarily sell everything. They rotate. And gold is one of the first places big money goes when it wants protection without picking sides. That's why you're seeing demand rise from every direction. Physical gold buyers, ETFs, institutions, everyone trying to spread risk. 3. The dollar. Gold's best friend. Third, the US dollar. Gold is priced in dollars, so when the dollar weakens, gold becomes cheaper for the rest of the world. That's instant demand, even when the dollar bounces. If investors don't trust the bounce, they still hedge, and uncertainty around currency policy is rocket fuel for gold, because gold isn't tied to a government promise, it's neutral. Fourth, global uncertainty. When the world feels unpredictable politically, economically, militarily, people don't just chase returns, they chase stability. Gold has one advantage no modern asset can copy: it has survived centuries of chaos and still kept value. So when trust wobbles, gold becomes a psychological anchor, even if nothing collapses. The fear alone moves capital. Fifth, inflation. Even if inflation cooled from past peaks, prices didn't rewind. Most people still feel the squeeze in food, housing, insurance, everything. And that creates a permanent shift in mindset. Paper money feels fragile, so investors start looking for assets that don't depend on policy promises. Gold becomes the obvious hedge, not because everyone expects disaster, but because nobody wants to be unprotected if purchasing power erodes again. Sixth, interest rates. Gold doesn't pay yield, so when rates are high, people prefer bonds, treasuries, savings. But when yields start falling, gold looks better, the opportunity cost drops, and here's the key: markets don't wait for rate cuts to happen, they front-run them. If investors believe rates are heading lower later in 2026, they buy gold before the cuts fully hit. That's why gold can surge even when the economy looks fine. Now the final reason, the most important one: central banks. When retail buys gold, it's emotional. When funds buy gold, it's tactical. When central banks buy gold, it's strategic. They're not buying for a quick trade. They're building reserves, and in recent years, central banks from multiple regions have been adding gold aggressively. Why? Because gold reduces dependence on any single currency system. And when the biggest buyers on earth decide gold belongs in their vaults, that creates demand that doesn't vanish on a bad news day. This is the reason gold can stay elevated longer than people expect. Because this isn't just a trade. It's a shift in how power stores value. So will gold stay above $5,000? Here's the honest answer: if these forces fade, if the world calms down, the dollar strengthens, yields rise, and central bank buying slows, gold can cool off. But if even 3 of these forces stay active at the same time, gold doesn't need no hype to remain high, it just needs the same fear, and the same demand, to keep showing up. So here's the real question: Team Gold stays high or Team This is a blow off top? Drop your team in the comments.